Welcome to John Redmann, Power of Attorney, the show that aims to empower you through knowledge of the law. I'm attorney John Redmann.
And hello, everybody. I'm Shauna Sanford. Today's show is part 2 of our conversation about debt collection laws and what you need to know if you are being harassed by debt collectors and how to get control of keeping up with those outstanding debts and paying them off. Attorney Jack Jernigan is back with us. His area, his specialty of law is debt collection, and he has some great advice to offer.
Last week we talked a lot about the Fair Debt Collection Practices Act and how you can deal with collection agencies and creditors with the law on your side. Today we're going to be focusing on some of the sneaky and sometimes illegal practices that creditors use to prey on unsuspecting people.
That's right, and they certainly do have a lot of tactics out there. But before we get to our guest, you had a very interesting case a couple of years ago that involved a couple. This was right after Hurricane Katrina, and a mortgage company. They were being harassed.
Well, they had a mortgage on a house that was effectively destroyed. There was a shell remaining. The mortgage company started harassing them, and over a period of years they were calling them sometimes 3-4 times a day. And it was so outrageous, well, demanding payment on the mortgage on the house that didn't exist anymore. And I ended up agreeing to take the case. We countersued and said, there may be some debts here, but you have countersued, you have harassed these people, these nice people so much. And there was even some fuzzy math, I'll call it, on how they calculated the debt. Long story short, we tried the case in 2010, I believe, and won. And not only did we win $10,000 for the homeowners for all the harassing that occurred, we wiped out the debt. And this case was tried just before that big story broke about all the robo-signing of documents and how these banks with mortgages or mortgage companies with mortgages, they didn't have all their papers in a row. Well, that's one reason why we were able to wipe out the mortgage. So it was a wonderful result. We can't guarantee that for everybody every time, but when bullies do bad things, it's our pleasure and privilege to take a stand and hopefully defeat them.
Right, and if you have issues out there that are similar to this one or others, we have some great information for you. Coming up next, our guest, Jack Jernigan, will join us to talk about debt collection and predatory lenders. So stay tuned. We'll be right back. Hello, everyone. Welcome back to the show. We are so pleased to have attorney Jack Jernigan with us again on Power of Attorney to talk about predatory lending and other schemes that you need to watch out for if you are struggling to pay your bills.
Jack has been practicing law for 3 decades in the areas of debt collection, consumer bankruptcy, and personal injury, and is a professor of business law at Tulane University. Jack, thanks so much for joining us again to continue this very interesting discussion.
It's great to be back. I love this topic.
Yeah, so much to talk about and so much really good information that we need to pass along to our viewers who may really be in a situation where they're being harassed by debt collectors, maybe behind on some bills, and really are struggling to sort of catch up. One area that we sort of mentioned during our last show but didn't get into it, payday loans. That's huge. I mean, you see the ads all the time, but this is something that you say people really need to steer clear of.
If possible, it's such a tempting trap for people who are living below the poverty level, below means, and if they get in a circumstance where they just absolutely have to have money, they will go to a payday lender and just pay an exorbitant amount of interest over time, and often it's even though they might only borrow $200 against their next paycheck,
right,
a year later they might still be in this revolving trap.
Yeah, it's so interesting that you use the word trap because in fact it is that. It's very hard, very easy to get into, but very hard to get out of.
It's very hard to get out of because typically people who make these loans are living just so tight with their income and expenses.
They're struggling and they just need a little money, you know, before they get paid again.
And the interest rates are so high, that's why it's hard to get out of.
Yeah, and it's one of those things, and you see it in other types of loans, and we'll get into that in a few minutes, I hope, where you're in a tight spot, you know your payday's coming, you know your paycheck's coming, you borrow just a little bit of money, but you end up paying way more back. And I don't mean like you'd pay on your credit card if you could put it on your credit card. It could be 10 times more than what you'd pay in interest on your credit card. It's outrageous. So
it is outrageous, and there used to be usury laws, John, and now there's ways around them, and you could pay 800, 1,000% interest on some of these loans.
Incredible.
10 times as much as you borrowed. That's incredible.
And that's why it's so hard to pay it off.
It is, and they're easy to get.
And they're very, very easy to get, right.
Yeah.
No, I like to joke, because I see it all the time in my practice. People come see me not only for personal injury, but just because they know me, they'll ask about, what about this, that happened to me. I like to joke that so many of these loans, these payday loans, these loans against litigation, if you have a case, people will lend you money on your case. The terms are so outrageous it would make loan sharks blush. I mean, that's how bad it really is. And I always say, don't do it, don't do it, don't do it.
Yeah.
It's a bad idea.
What are some of the difficulties when it comes to handling and dealing with these kinds of cases when people come to you?
Well, sometimes when they take out these loans, they'll have to give a post-dated check. And that is terrifying to people, knowing that they've given a post-dated check, and so they have this strong hold over them that they could be facing bad check charges. So resist that. If you have to take out a loan, resist giving post-dated checks, because then they really have a strong lock on you, and that's another way to get in this revolving track. Just keep giving them post-dated check after post-dated check and paying these huge amounts of interest.
Yeah. And even though they're not supposed to cash your check until the date you put on the check, some of them will, but you're not supposed to write that check and give it to somebody unless you actually have money in the account. So God forbid things go really south and they try and get you in trouble with the local district attorney or city attorney. It's not a defense to say, but I was going to have money in there. Or I'm not sure that it's a defense. Hopefully they'll be compassionate with you and understand it's the payday loan people who are the bad guys here.
But not always, so that's why we want to discourage ever giving a
Moral of the
post-dated check.
story is just avoid that. Avoid litigation loans, and sometimes they're so outrageous, even though they might be in a gray area of legal, I'll fight them, and we won't pay back 800% interest, 400% interest. We'll pay 10% interest because I'm threatening to go after them for penalties for their misbehavior. Right.
And
but that's not a guarantee for everybody who's gotten a bad loan.
And still the federal law does apply here once the harassment starts, right?
Oh,
in terms of you trying to stop the harassment, the harassing phone calls, it still applies even in this sort of situation.
Well, it does not apply to the Fair Debt Collection Practices Act does not apply to the payday lenders themselves, because they are not people covered by the act. Those are only debt collectors that if you don't pay, eventually a payday lender may refer it out to a debt collector.
Okay.
But in the initial stages and while you're discussing it with them, they are exempt from the Fair Debt Collection Practices Act, unfortunately.
Good to know. They are exempt from that.
Yes.
What about this whole issue of mortgage modifications? And John, this is something you know very, very well. We talked a little bit earlier about a case that you actually handled a few years ago.
Well, this is the Cephalou case. We referred to it in the opening. It's just one of those sad tales of a mortgage company that went overboard in trying to collect, or they had a collection company get involved. Clients had their home destroyed in St. Bernard Parish after Hurricane Katrina, and they still owed a mortgage on their house. They did everything they could to cooperate. When they got just a little bit of money that they were able to get from the little insurance they had, homeowners insurance they had, all of it went to the mortgage company. But they still had a substantial debt. They were calling, and like we talked on the last show, it's just like deja vu. 3-4 times a day they were calling. This poor couple, a young couple, you know, trying to get back on their feet. The couple would say, we're doing everything we can, we're trying to pay everything we can, let's try and work this out. They were calling at work, and then even after they came to me and I said, let me see if I could negotiate for you, do something for you, they were still contacting the clients afterwards. Long story short, it went to trial about 2 years ago, just before the big scandal about mortgage companies not having their documents, proof of the loans in order. The mortgage was wiped out. So they owed nothing. An $80,000 debt was wiped out. And they were fined $10,000 for the harassing phone calls. Now that's an unusual situation, and this mortgage company was not subject to the Debt Collection Act because it wasn't a debt collecting company. So under other laws, under Louisiana law, we were able to get this judgment. And it was not appealed. They paid, and I had very happy clients. Can't promise that result across the board, but the Associated Press thought it was significant, and they reported the case across the country. It's just a good story.
Well, they had a very good lawyer.
Well, you're kind to say that, but when you go to modify your loans, that's the segue into the next topic. There are some dangers inherent with unscrupulous lending companies. Why don't you tell us more about that?
There are, and these loan modification programs are very new, so it's an evolving issue. They've only been around since the collapse of the economy several years ago, and the federal government wanted to try and help homeowners by incentivizing mortgage companies to modify loans of people who might not be able to qualify to refinance. The problem I see a lot of is these are giant companies typically, Wells Fargo, Bank of America, and they'll have a loan modification department, and they'll have a foreclosure department. And often the loan modification department will tell you when you call to get a loan modification, you do not qualify because you are current on your loan. Seems strange advising somebody to intentionally get behind, but they do that, and I've heard this so many times. I'm certain that it's accurate. I've had, for example, a doctor lives in English Turn. I was looking at the foreclosure list, and I see his house is set to be sold at auction in 3 days.
No
Wow.
kidding.
Literally, I called him. I said, "Do you know this?" He said, "No, it's okay. I'm getting a loan modification." This is a physician who makes a lot of money, and they were telling him. They told him to get behind, and they told him he got served with foreclosure papers. They said, "Don't worry about it. Don't worry about it."
Amazing.
And so we got it stopped, but it was just luck that I noticed that his house was set to be sold on the auction block.
So the mortgage company actually told him that the way for him to get the modification was to get behind, to become delinquent with the payments.
They do, and as far as I know, that is not a requirement to receive a loan modification. The only thing I suspect is that perhaps it makes you more eligible somehow in this criteria when they evaluate you.
And I can't even believe that, but let's define it more broadly. People have notes they pay every month on their homes. Because interest rates have gone down so much in recent years, many people have refinanced their houses, or they want to refinance. So instead of paying 5, 6, 7% interest on that house note, on the big amount of money they owe on their house, they get that interest rate reduced significantly, and it means a much smaller monthly payment. And so you need to refinance. Some of these unscrupulous lenders are actually, in your experience, they're saying you need to be behind in your mortgage payments in order to qualify for refinance, and that makes no sense. And I'm telling you, if you hear that from somebody, talk to an expert. Talk to Mr. Jernigan. Talk to other experts, financial experts, because the better your credit, the better your refinance terms. Not only does common sense say that, but that's been my experience, and I'll bet you that's been your experience.
Yeah.
Without a doubt, it cannot help you to get behind on your mortgage.
Yeah.
Right.
And it's really, it is unbelievable to think that people are being encouraged to do this in order to have their loans
It
modified.
almost seems like they're trying to set up financial catastrophe so they can repossess your house and make you homeless and get it at a bargain at auction. It stinks to high heaven.
It makes no sense at all, but it is very common.
Very common. Okay, well, stay tuned because we have to take a quick break right here. But coming up next, we're going to get to your questions about debt collection. Stay tuned. We'll be right back.